April to run the Reno-Sparks housing market is supposed to hit its stride, but this year, the story isn't so simple. Inventory is still tight, buyers are picking their spots, and prices continue to hold in a market that feels like it should be slowing down. So what's really going on? In this update, we'll break down the April stats, walk you through the charts, and show you the trends that are shaping the rest of the spring market. You don't want to miss this. Let's go.
Assist to sell way smarter.
Hello, everybody, and welcome back to the Reno-Sparks Real Estate Market Update Show, this time for April 2026. It's great to be with you. And of course, thanks for joining us. A couple things to mention before we get started. This is for the Reno-Sparks metro area only and includes single-family residential properties, basically houses, townhomes, and condos. So we don't include rentals or apartments or multifamily, commercial, land, any of that stuff. Now, most of these charts go back about 10 years. As you can see up on the charts here, the main data point that we're going to discuss is in this yellow box right up here. And on the right, you'll see March 2025. Now, I know this is the April 2026 market update, but we like to compare stats year over year. So we're going to look back to the end of March 2025 to give you a good comparison. And of course, in the middle will be the difference between the two data points. Now, the first chart we always start with is mortgage rates. Why? Because it has the biggest influence on the overall real estate market. Roughly 80% of home buyers use a mortgage when purchasing a property. Therefore, as mortgage rates or interest rates go higher, so do payments, which tends to put pressure on prices one way or the other. Now, the one thing I did want to point out is this sort of bracket that's forming here in mortgage rates, going up, going down, but staying right around that low to mid 6 range. And you can see we're down 7.1% from last year at 6.2%. Last year, we're at 6.7%. This is a historical 30-year fixed rate, just to give you some context on what's going on here. This line right up here is you see the historical average of 7.7%. That's historical average. Right now, we saw a price surge back in 2022 to 6.48, and then it went right around 7% in 2025 before the peak. And this time last year, as you saw, it was much higher. So even though prices dropped a bit and then they've gone up recently, they're still in a very reasonable, below average historical range. And this is kind of the new norm when it comes to interest rates. Now, at the end of this, I will be sharing a little bit more of my opinion, but we're going to go through all the numbers and stats and charts first. Now, the number or the chart or stat that gets the most attention in the newspapers, on TV, and all over the place is the median sales price. And right now we're at $559,900, which is up 3.4% over this time last year, where we had a price of $541,500. But again, you'll see that same bracket here. We're seeing prices pop up a little bit, pull back a little bit, pop up a little bit, pull back. It's kind of in this range, in this bracket, if you will, of prices. So we're not seeing a lot of surge up or down. Now, all of this leads, when you have interest rates, you have median price, that leads to the average mortgage payment, which right now is sitting at $3,957, which is down 1% from this time last year, was at $3,997. Affordability index, and all you need to know about this chart is this is a percentage. A percentage the median income earner can afford of the median priced home. So basically 62%. You want to see this number at least 80, 90% and above. The higher this number goes, the better. The more affordable homes are, the more people can afford. And as you can see, we were actually very affordable all the way back in 16, 17, 18. It dropped a little bit below 90 in 2019 before we saw interest rates drop through the pandemic and so on. We're at 100 and we've seen it drop recently. But the good news is we are headed in the right direction. We're right now at 62% of new listings. Now, these are listings that came on the market for the month of March. 700 new ones, which is up 1.2% from this time last year. We're sitting at 692. The story starts to get interesting when you look at price range, because this chart over here is the overall market. Every house, every price, doesn't matter. We like to break it down by price range too, just to see what's happening in the different ranges. And you can see on the bottom, we have all the different price ranges: 1 to 200,000, 2 to 300,000, 3 to 4, 4 to 5, and so on. You can see that along the bottom. Most of the listings are coming on the market between 400 and about 650, 700, maybe even 800. So I want you to keep this chart in mind with all these new listings as we go over and we take a look at active listings. Now you may be saying, what's the difference between active and new? So new are just for the month of March. Those are just the people that raised their hand in March and said, yep, I'm going to put my house on the market. Active inventory is the total inventory that could have come from February, January, December, whatever. Could have come from a while back. This is just the standard inventory. So this is your direct competition if you're thinking of selling your home. If you're thinking of buying a home, this is the number of homes that are on the market. Now, what's interesting, if I go to new listings, 700 new ones, but there's only 900 total active listings, which means we're selling through most of the inventory every month. We'll talk more about that in a minute. But we are down with active listings, down 22.1%, where we had 1,159 last year. This year, we only have 903. Now, this is where it gets interesting. Talk about active by price. As you can see, most of your active listings are 650 to 700, 750 to a million in this range. And of course, it drops off the higher you get. But I want you to keep a close eye and remember this as we get into actual sales. Now, closed sales just means sold homes. How many homes sold in the month of March? 511, which is up 9.7%. Over this time last year, we had 466. This is where it gets interesting. Closed by price. We are seeing a bunch of closings between 400 and 500, 5 to 600,000, even 600 to about maybe 650, 700. Once you get further on in the price range or higher in the price range, you start to see sales drop considerably. Now, the reason it's important is look at the total closed sales. And if we go active by price, you can see a whole bunch of active inventory, especially in this 650, 700 and the 750 to a million. Lots of actives up here. And even in the upper end price ranges. Now, if I go to closed by price, very few closed in that area. So we're starting to see the numbers diverge. We're seeing more and more inventory in the upper end price ranges. We're seeing fewer and fewer sales. Now, there's a few charts I like to look at, which I consider canary in the coal mine or early indications, or just kind of give you a general direction of the market. And one of those is supply of inventory. Now, all this number means is 1.8 months. That's the number of months it would take to sell the total inventory on the market. If we sold, so for example, let's say we had 1,500 homes on the market, we sell 500 a month. That's 3 months of inventory. Right now we're at 1.8, which is extremely low. And then I like to look at unsold inventory as another early indicator of what's going on. If homes are selling and there's very few unsold listings, that means the market's strong and going to remain that way. Unsold just means they were listed and for one reason or another pulled off the market, they expired, whatever, withdrawn, canceled, etc. Again, 84 last year, 78 this year. Now, what does all of this mean for you? Well, if you're selling your home, it means that prices are pretty stagnant. Affordability is stretched. And it really becomes a function of price range. And again, if I go look at the actives, what's your competition like? Are you in this upper end price range with a ton of listings? And then I go over to the solds with very few sales. The wider this gap is between actives and solds, the more pressure is on price because people have more to choose from. There's more active inventory. Buyers can be much more selective. Now, the opposite is true. If you're in this price range down here where everything is selling between 4 and 5, 5 to 6, and so on, there's very few homes on the market. And if you look at closed sales by price, this is closed. If I look by active by price, you can see very few actives, tons of sales. As that gap widens, it tends to put upward pressure on prices. So if you're in the 4 to about 600, 650 range, still very active, not as much inventory, things are selling. If you start going to that upper end price range, you need to be very price conscious and be very aggressive with pricing. Now, buyers on the other side of the equation, the downside is there's not a lot to choose from. We don't see a lot of inventory out there. But the upside is prices have remained pretty solid. Interest rates have remained reasonable. And I always tell buyers the same thing. Look, don't try to time the market. It's a fool's errand. You can't time the market. If you find a property that works for you, it's affordable, it fits your needs and your budget, go for it. I'm very bullish on the Reno market overall. We have massive expansion. I shared this in the last video. I'll put a link to it below. I had shared some charts about economic growth and migration patterns from California and other places here to Reno. We have a ton of construction. We have a ton of, we have an economic boom going on. We have tons of people moving here. That just means there's going to be demand for properties. I don't see properties falling, values that is, significantly. So long term, you're going to be just fine. Which leads me to my last point, which is if you're thinking of selling your home or buying a home, you owe it to yourself to at least check out Assist to Sell. Sell your home for only 1.5%. That's it. It's included in the multiple listing service. It is full service, meaning we show the house, advertise it, do absolutely everything you'd expect from an expert local professional realtor. If you're buying, we also have some incredible buyer programs. We work with buyers on a daily basis as well. If you want to get a quick valuation on a property you're thinking of buying, or maybe you're thinking of selling your home, you can click on this Find Out Now button right here, and we'll give you a quick automated valuation, get you started. Thanks for joining us right here on the Reno-Sparks Real Estate Market Update Show. Bye-bye.
Assist you sell way smarter.